So while you are at the Morgan Stanley India Investment Forum, we are also viewers at a time when the monetary policy review has started. Given the inflation dynamic, given the growth dynamic, how do you expect the MPC to read all the data, and what policy approach can we expect?
So our view is that RBI and the MPC will remain decisively on the easing side. We've already seen that change from the RBI in the last two policies as well. They have lowered rates by 50 basis points or two rate cuts till now, added ample durable liquidity or upwards of $100 billion on a calendar year basis, and dialed back a bit on the regulatory tightening and the concerns on the regulation side as well. So I think more of this will continue. I think for the June 6th policy, we are expecting a 25 basis points rate cut, continuing with the accommodative stance. I think on liquidity, that's not necessarily has to be announced on the MPC day itself, but I think a calibrated approach towards adding liquidity as and when needed to maintain system liquidity and surplus will continue. And I think over time, probably some more dialing back on the regulatory tightening could also come through, which would help support credit demand as well. So I think RBI is going to be looking at trailing data, which will show that inflation has eased. Growth, yes, has surprised positively, but when you look at the forward-looking data, it will probably get more comfort on inflation, that inflation is likely to be below 4%. Outlook on growth, RBI has a number of 6.5%, so I don't see that changing. But at the same time, given the external headwinds, the outlook on growth is therefore cautious. And I think when you put the two together, there is enough reason to continue with the easing stance and therefore to cut more. So yes, we do expect one more in June and probably another rate cut in August, and therefore we look at a cumulative 100 basis points of easing.
Upasana, one final point, and I am sort of going back to fiscal policy, and in some ways it's a little early to talk about what is likely to happen towards the end of the fiscal year, which is when we will hear from the government in the budget as to the priorities for the subsequent financial year. But given the better than expected performance to some extent on tax collections, RBI has also been very generous. How is the overall fiscal situation looking like to you for the current year? And if this were to continue, what kind of policy priorities do you expect the Finance Ministry and the Government of India to continue to pursue?
See, I think the fiscal balance sheet for the government remains in a pretty decent spot. It is still really very early days to judge this year's fiscal data. We've only got 1 month's data, but the government has maintained its momentum on capex spending, which I think is good news. Yes, the trend on like indirect taxes, GST looks good from what we know from April and May. What we know from RBI's dividend check to the government also gives comfort that there is enough buffer if there was to be some hits and misses on the revenue side. So I think it makes us comfortable that the government will be able to meet its fiscal deficit target of 4.4% of GDP for fiscal 26, and at the same time ensure that the capex spending momentum is maintained and that they meet the budgeted numbers. So I think at a point in time when the Indian economy was going through a period of slowdown, there was concern that whether they will be able to balance the consolidation with the increase in capex that has been budgeted. But I think that has got now allayed with these incoming data points, and I think that is the best situation to be in. If we were to see continuous, upside surprises on the revenue side, then as far as we've seen the government's priorities till now and the way they have used it, it's probably going to then better their fiscal deficit consolidation, maybe a tad higher than anticipated. But I think for now, that's something that is still too early to call out for. I think what I would say is that we are in a good spot to balance both consolidation and meet capex spending.
If you like the video, do like, comment, share and subscribe.